Are you a high school student thinking about paying for college? Or maybe you're a recent college graduate and are wondering how you're going to pay off all of your loans? Well, in this video, I'm going to tell you everything you need to know about your student loans. Coming up.
Listen.
Hey, this is Carlos with Influential Finance. In this channel, I make weekly videos to help you improve your personal finances. So if you're new here, consider subscribing. Today, we are talking about student loans. Now, this is a topic that I've been wanting to talk about for some time now. I feel like every other day, we hear on the news about how the total student loan debt in the US has reached an all-time high. Well, you're about to hear it one more time. According to an article published by Forbes, the current student loan debt in the US is at about $1.6 trillion, with the average student loan debt per student being approximately $30,000. Student debt has affected almost everyone I know, and I'm guessing it has affected you too if you are watching this video. Regardless of where you are in your college career, it is always good to learn about what we are getting into or what we have already gotten ourselves into. Therefore, I hope this video gives you a good foundation for you to learn more about your student loans and your options when repaying. So let's jump into it. There are two main types of student loans. You have private loans and then you have federal loans. Let's start off by talking about private loans. Private student loans are any loans provided by an organization that is not the federal government. Some of the organizations that provide private loans can be places such as a bank, a credit union, a state agency, or even a school. The terms on private loans are usually set by the lenders, and these can vary widely between the institutions. In addition to this, the interest rates can also vary widely and can be either fixed or variable throughout the life of the loan. Having a variable interest rate simply means that you can start off paying your loan with a low interest rate of about 3%, and then end up paying a much higher interest rate of 10% later on in your repayment term. The interest rates for the private loans are also higher than those of federal loans. And lastly, private loans are not subsidized by the government. This means that they will accrue interest while you are in school. Keep in mind that before applying to any private loans, you should always consider applying to federal loans first, since the terms on federal loans are much better than private loans. That brings me to my next point. Let's now talk about federal loans. Federal student loans are loans that are funded by the federal government. Federal loans have a fixed interest rate, which is typically lower than interest rates for private loans. Federal loans can come in many different types. You have subsidized, unsubsidized, direct plus, and consolidation loans. Let's first talk about subsidized and unsubsidized loans. Subsidized loans are loans where the federal government pays for the interest while you are in school. From the time you take out the loan to the time you start making payments after graduation, this type of loan will not accrue interest. This is huge because having a subsidized loan can save you thousands of dollars when repaying. However, these loans are usually given to students with financial need. Unsubsidized loans, on the other hand, are loans that can start accruing interest the second you take the loan out. Therefore, these loans will accrue interest while you are in school. Let's now move on to Direct Plus loans. Direct Plus loans, also referred to as Parent Plus loans, are simply a form of unsubsidized loans that are taken out by your parents to pay for your college education. These loans are taken out by your parents under their name, so it is their responsibility to pay for these loans, not yours. Next, we have the Direct Consolidation loan. If you have multiple student loans with multiple servicers, you can apply for a direct consolidation loan. This loan will be used to consolidate all of your loans that you have with different loan servicers. One reason you may want to do this is to make your life a little bit easier and not have to keep up with different financial institutions. Now, let's talk about paying back your loans. After you graduate, your college or university will report your graduation date to your loan servicer, and you will be required to start making payments on your loan after 6 months of graduating. It is important to know what repayment options you have available with your federal student loans. Knowing your different options can help you pick a repayment plan that best fits your current financial situation. Keep in mind that repayment terms for private loans vary depending on the lender. So you will want to research your private lenders to get more information for what loan repayment options you have available. if you have private loans, of course. Let's now go over some of the loan repayment options for federal loans. First, you have your standard repayment plan. This plan breaks up your loan into equal monthly payments. This plan will guarantee that your loans are paid off within 10 years. With this plan, you will likely pay the least amount of interest throughout the life of your loan. Next, we have the graduated repayment plan. With this repayment plan, your payments will be low at the beginning of your repayment period and will increase gradually as you pay off your loans. Moving on to the extended repayment plan. The extended repayment plan is similar to the standard repayment plan. It breaks up your loan into equal monthly payments. However, instead of breaking up your loan throughout a 10-year period, this payment plan breaks up your loan into a 25-year period. This loan pretty much guarantees the lowest monthly payments, but you will likely pay the most amount of interest out of any other repayment plan. Next, we have the pay-as-you-earn and the income-based repayment plans. The pay-as-you-earn and the income-based repayment plans are very similar. They are both plans where your monthly payments will be set up to be between 10 to 15% of your discretionary income. Because your payments will be set up to be a certain percentage of your income in these repayment plans, the more you make, the more you will pay. Now, two things to keep in mind about these repayment plans is that you will need to update your income every single year, even if your income has not changed. And if you are married and file taxes together with your spouse's income will be included in the calculation of your monthly payments. One thing to note is that there are two other repayment plans that apply to federal loans that I will not cover in this video. These two are the income sensitive and the income contingent repayment plans. Considering that these two repayment plans are used by less than 5% of borrowers, I think it's okay if we went ahead and skip them for now. I'll leave some links in the description of this video below if you'd like to learn some more about them. So, what happens if you don't make your payments? Let's talk about this briefly. Private loans get treated like any other loans. They will be sent to collections, which will highly impact your credit for several years to come. However, federal loans are completely different. It is highly unlikely that federal loans will ever be sent to collections because they are backed by the federal government. In addition to this, the federal government has the power to literally force you to pay these loans one way or another. They have the power to withhold any tax refunds you receive and even garnish your wages. To give you an example of this, they can send a letter to your employer and your employer will be forced to automatically withhold a percentage of your salary and send it directly to the loan holder. Federal student loans do not go away even if you declare bankruptcy. Whatever you do, if you can't make your student loan payments, do not just let them pass. Call your servicer and ask them if you can place your loans on forbearance or deferment, if possible. Make sure to always communicate because the worst thing you can do is to do nothing at all. I wanted to also briefly talk about the Public Service Loan Forgiveness Program. This has been a very hot topic due to the large percentage of people that have been denied. I am planning a whole video on this subject, so stay tuned for that. But let's talk about it briefly for now. This is a program that was passed by Congress in 2007. In short words, the program says that for anyone with direct federal student loans who go into public service and make a qualifying 120 on-time payments can get the remainder of their loans forgiven. However, very few people have actually qualified for this program. As of March 2019, out of the approximately 75,000 people who have applied to the PSLF, 0.7% actually got their loans forgiven. Not even 1%. The top three reasons why people were denied were that 53% did not make the necessary 120 payments, 25% did not fully complete their applications, and 16% had loans that were not eligible. So if you're counting on applying to this program, make sure that you do your thorough research to make sure that you actually meet the requirements. One thing to point out about the PSLF is that, as you heard a few seconds ago, not all loans are eligible for this program, and not all repayment plans are eligible for this program. I will be releasing a full video just on the PSLF in the coming weeks, so make sure you stay tuned for that. But for now, that's where I'll leave it at. And lastly, if you'd like to get more information about federal student loans, make sure to go to studentaid.gov. This site has all of the answers you will need, and it is the most reputable source for information regarding student loans. That wraps it up for this video, but if you'd like to learn how you can make a plan and pay off all your student debt, I'll leave a video link that I made a few weeks ago right on the top right corner of your screen. make sure you click on my face right here to subscribe. And if you'd like to continue watching videos on my channel, I'll leave another video linked right over there. That's been it. I'll see you in the next one.